Hey guys, welcome. Have you guys ever felt, and I know I have, that whatever you did, the market would just go in the opposite direction of your trade? You know what I mean? Like, there's a lot of people that think that this is because they aren't using the right combination of indicators or whatnot, or they're not using the right time frame. But come on, like, really, what does that have to do with it? This is kind of where harmonics come into play. Let me just grab a pen. I'll show you what I mean. This is a harmonic pattern, and they kind of look like W's, if you would. And what we have here is our PRZ, which is our potential reversal zone, and that's where we want to see price come into so we can short. Although the problem that happens is most traders, they see these range lines here, and they start shorting as price approaches and scaling in. And that's all fine, but what happens is price, goes down and they think they're a genius until it boomerangs back when they really should be shorting where this PRZ is. Okay, with obviously a stop just above it to control your risk. So that's what people should be doing, but they don't do that. And these patterns are all based on human emotion, which gives us the accuracy that it does. And we can see this on other things. So let's look at a different chart just so you guys know this stuff isn't fabricated. Let's see what's happening right now. We have a pattern on silver, and you can see this bullish pattern played out with a PRZ down here. But we also shorted this one when we had a PRZ in this area up here. You can kind of see that. So that got us into the short, and then we were looking for other places to short, and we got into this one right here on this wick. And how did we know to get in there on the wick? Well, in order for a wick to be created, price goes up and then it has to reverse. And we did that by the pattern on the 15-minute chart. You can see it here. I mean, this stuff is not rocket science, but this is the area that we have where price is likely to reverse. We have a stop up here, and we have a great potential to be moving down. And this is what's currently happening as we speak. So our profit target might be somewhere in this area, and you can see here how much reward we have, right? Where our risk is minimal. And most people don't do this. Most people don't have like a reward of 1 and a risk of 3, right? They take it the other way around. They'll risk 3 pips for every 1 pip of gain. And when you have high probability trades like this, this is not the way that you guys should be trading. So that's how you can kind of use harmonics to help you, even with simple strategies like support and resistance that we saw here in the Aussie. I mean, this stuff is not that difficult. So I mean, you can use it in conjunction with a lot of other things, but the main thing is that we're not using indicators. Indicators are not the solution. They're more the problem, if anything. And what you see down here, this is not by any means an indicator. We go into what this is, which is essentially the Hurst exponent. We go into this in more detail inside the members area, and you guys can check that out if you want as well. But if you want to know more about us, you can go to fxgroundworks.com to get member access and to be alerted to all these patterns, as well as all the videos and educational stuff that surrounds them. But you can also, feel free to subscribe. We do have videos that do come out, so just click on the subscribe link. And if you have any questions, by all means, let us know, and we can definitely assist you with that. So once again, hopefully we'll see you inside of the members area. And if not, do subscribe, and we'll talk to you guys soon.